2025 is the year that real sustainable businesses are being built on-chain. After years of development, finally the infrastructure is ready for prime time. In this video, I'm going to break down exactly what I mean by that, how this ties into two of the most popular recent crypto narratives, and how you can take advantage of it. Now let's get into it. To start, I want to talk about what exactly I mean by sustainable businesses that are built on-chain. If you've been in crypto for a while, or even if you've been in it for only a year, then something you've probably noticed is that the vast majority of tokens, I'm talking like 99.9% of tokens, have absolutely no fundamentals. That means there's no business backing them that they're tied to, there's no revenue, there's no earnings. Really, the entire value of the token is ultimately the community that's around it and believes in it. However, that's starting to change. There's now actually dozens and dozens, if not hundreds of businesses that have a token tied to them that are generating revenue, and that oftentimes are generating revenue that's actually at a pretty good multiple to their market cap. And so when I say on-chain businesses, what I mean is a couple things. The first type of on-chain business would be what you think of when you think of a crypto app, some sort of decentralized finance application that you log into with your wallet, that you use to trade, that you use to lend. Usually these are financial applications because crypto is at its core a better form of finance, but it's still ultimately linked to finance. So a lot of the first applications have been financial in nature. And that's the first type of on-chain business. And a lot of these historically have actually not made very much money, but that's starting to change because you now have a critical mass of money on chain. You have a critical mass of real assets on chain. Most of these are stable coins, which is tokenized fiat, but you also have tokenized real world assets. You have Bitcoin moving into the DeFi ecosystem. So you have things that people are holding not simply as a short-term trade. And that actually allows you to build a more sustainable financial business on top of it. So that's the first kind of on-chain business. The second kind that we're starting to see now, the second kind is going to be applications that are more of a traditional Web 2 application, but are built using crypto rails. And there's it's not binary here. There's a sliding metric. So for example, something like Polymarket, there's been prediction markets in Web 2, right? But crypto is a better form of payment rails for that. So lots of people use Polymarket to bet on elections, to bet on other world events, not because it's crypto, but not even because they care about holding crypto, but because they want to bet on these events, and it's a better form of payment rail for that sort of application. And then on the extreme end, you have this new narrative that's come out over the past few weeks involving an application known as Believe, involving something known as Internet Capital Markets. And what you have here is applications that are pure Web 2 applications. There's no financial aspect, something like a game or an AI application. However, they still use crypto rails to incorporate some sort of token rewards into the game. That could be a token that's used in the game. That could be a token that's airdropped to users. We'll talk about some other examples. But basically the idea being that it's a business that is now using on-chain payment rails simply because they allow them to do something that they couldn't do otherwise, not because it's crypto and not because the users necessarily even care about crypto. But enough monologue, let's talk about the two pieces of news that this ties into. First of these is this new internet capital markets narrative that's blowing up. This involves an application known as Believe, like I mentioned before. And these are basically Web 2 apps that incorporate some sort of token functionality or that launch alongside a token. We'll talk about both the bullish aspects of this news and also some of the reasons to be skeptical of it. In the second piece of news, and this is less news and more, I think it's a good illustrative point, is Mike Novogratz was on CNBC last week talking about crypto, as you'd expect him to. And he was talking specifically about Hyperliquid. And now one thing that was interesting when he talked about Hyperliquid, I'm not going to play the clip here, but one thing that's interesting he talks about one of the things that will appeal to people about Hyperliquid is the fact that it has high revenue and that it uses that revenue to buy back hype tokens, which is something that equity investors could understand. And he mentions that you can track the revenue in real time. So it's verifiable on chain. And people who watch this channel a lot know that I love on-chain metrics. I mean, heck, I work for DeFi Llama, which is one of the premier dashboards for tracking on-chain metrics. And I think that this underscores that this shift towards transparent real-time metrics is not just something that DeFi investors, not just something that degens are going to use to be day trading. It's actually, I hate to say the word, but it's a new paradigm for finance, where in the future you will have some companies that are still traditional equities that are off-chain that report earnings quarterly, and you're going to have other companies that are on-chain where earnings are, they're not even reported. They're trackable in real time, hourly, daily, maybe even faster than hourly if one really wanted to. And that's really something that I think most people haven't grasped yet. And it's also something that as you start to have larger companies that are built on-chain, suddenly you'll have some investors that will develop a preference for companies that are on-chain simply because they can track their earnings more in real time. And then that's going to start a flywheel where more companies are pushed to actually deploy on-chain in the first place. So now that we've introduced the main stories, let's dive in deeper to this first one, this internet capital markets. Now, this is a detailed article we put out on the Dynamo DeFi Twitter account. I highly recommend checking this out if you know nothing about this narrative, or even if you know a little and you want to get a rundown of it. It's, in my opinion, the best written summary online right now, although I am biased. So what exactly is this? Like I mentioned before, it's this Believe application, which allows developers to create apps, and those apps have a token tied to them. And this solves a couple interesting problems. On the side of crypto investors, it solves the problem that you are investing in a token that's at least in some way related to an app that's not tied to speculation. Ergo, in theory, its performance, if it has some sort of demand sinks built into the app, won't be wholly tied to the crypto markets. It'll be tied to the success of that specific application. For example, if AI is booming and you have an AI app, then in theory, you could have demand sinks for the token that are tied to the success of that AI app, not tied to other crypto native things. Second, it solves a problem for small developers. So you're an indie game developer. You're not going to raise some sort of big seed round, but you want some way to bootstrap your company. And this gives a new way to earn revenue from fees because they can start earning revenue from fees related to the token immediately. So you can think of it as a way for these sorts of small developers to monetize quickly. And so what sorts of things are people building on here? Let's scroll down and we'll find a few examples. One is this noodle app. So in this case, this is this snake game. You might say simple, but those kinds of addicting games can get big numbers. Here you have a profile from Believe about this creator and or this developer, and the thing you know is that he's built a lot of things that are not crypto native. So this is someone coming from outside crypto to build a app that is at least tangentially related to crypto. You've got here Dupe. It's a deal unlocking price engine. So it will find cheaper versions of things you want to buy online using image recognition. Here you have another one. You have this Buddy. So this gives you rewards for growing on X, kind of a gamified way of social media growth. Here you have Fitted. This is an AI-powered virtual closet. And the point of these is not that you should go out and invest in any of these tokens. In fact, I'll talk about my strategy related to this in a second. The point of this is that these are at least real applications that are not solely tied to speculation. And I know that sounds like a low bar, but I think that that's an important step if you actually want to take crypto to the next level. Now for the risks and for some things that I'm wary of related to this narrative. First thing is that most of these tokens right now don't actually have any utility in the app. In fact, if you actually go on the Believe terms and conditions, they're actually forbidden from adding most of what people would call utility. They're not allowed to do buybacks. They're not allowed to pass on fees. They're not allowed to do anything that could make the token a security. And as a result, most of the tokens are basically meme coins right now. They're meme coins with the name of an app. And so you're trusting that eventually there will be some way to tie the app to the token, but it's not guaranteed. And they're trading like that. If you actually look at the Believe app ecosystem, you can see, for example, the past 24 hours, a ton are down 25%. I tried to wait to make this video until things had dropped more. But a lot of these are trading basically similar to meme coins. Now, I imagine this one pumped before it was listed on CoinGecko, but you can see here that it went up to a decently high valuation, went up to a market cap of nearly $50 million. and then maybe even over $50 million. And then it sold off pretty hard, sold off way more than 50%. And so these things, they're trading similar to meme coins, even if they are tied to these apps today. That being said, I'm still covering this. And like I said, I waited until a lot of them had crashed to cover it because I think it's an interesting new meta. And I think that in the mid to long term, you are going to see a lot of apps that adopt this model where they have some token tied to them. And many of those will end up incorporating some sort of utility. In fact, just recently, Believe announced that there will be new features for coins added. So you won't be able to do things that can make it a security if you're a developer, but you will be able to incorporate it as having utility into the project easily. You'll be able to find some ways to automatically burn the fees and make it deflationary. You'll be able to use it to give access to investments, to discords. You'll be able to have vesting, and you'll be able to randomly airdrop users. So one thing that's cool about this is the way I'm conceptualizing this is it's a no-code. It's a no-code framework for developers to now incorporate token functionality into their apps. And does every app need a token? Not really. No, in fact, definitely not. But some apps may find that they're able to either grow faster, monetize faster, or otherwise improve the virality and addictiveness of the app by incorporating some of these token-based features. And just making these tools available to people who are not crypto developers, I think is going to open up a lot of creativity and ingenuity related to token usage. So I'm excited to see where this goes. Now, what about how I actually plan on taking advantage of this? Well, I would say, like I said before, you could follow these tokens individually and see which ones are planning to incorporate utility, and you may find some opportunities there. However, when there's a new narrative, if you're not going to spend a lot of time researching on it, usually the best bet is to just invest in the main token for the narrative. The leader, the ecosystem, if you will. This was Virtuals for the AI agents, and for Believe, this is the launch coin. Now, I don't have any position in this right now. Disclosure, I do not. I do not have a position in this right now. However, if one really wanted to dive into this narrative and you developed a bullish thesis on it, then I think for most people, the safest thing to do would be to get most of your exposure from the main app related to the ecosystem, main token. Because if this doesn't perform, then it's unlikely that anything else in the ecosystem performs. Now let's talk about this Hyperliquid news. And by news, I mean the fact that A, its token is going crazy, B, that you now have people on CNBC talking about the revenue it's generating and the fact that many aspects of it make it appealing to more traditional investors. So let's take a look at the Hyperliquid fees and revenue. And in Hyperliquid's case, those are virtually the same because they use their fees to buy back Hype tokens, which counts as revenue. So let's look at the daily revenue. $3 million past day. $2 million the day before. 1.1 million, 1.6, 2, 1.9, 2.3, 3.17. So every single day, Hyperliquid is generating millions of dollars in revenue that they're using to buy back Hype tokens. That's actually pretty solid, right? That's if you do the math on that, 365 days in a year, that's depending on where it levels out, that's an annualized rate of somewhere between 365 million and $1 billion of buybacks in a given year. And so then is it any surprise that Hyperliquid's fully diluted valuation has rocketed up to nearly $26 billion as of the time I'm recording this? And you're probably saying to yourself, okay, I want to invest in something that has good fundamentals that's not already top 20 coin. I got you covered. So there's two places you can go. First, check out my newsletter, newsletter.dynamodefi.com. Every single week, we send out at least one, usually several newsletters covering exactly those sorts of things, both recommended readings for the newest narratives, as well as on-chain analysis to help you find things like tokens with strong fundamentals. Second thing you could do is to do the research yourself, and I would recommend going to the fees and revenue dashboard on DeFi Llama. And you can see here, this is sorted by the price to market cap to revenue ratio, okay? So what this is going to show us is the projects that have low market caps compared to their revenue. So in this case, for example, these are projects that have under a 10x multiple of their market cap to revenue. And some of these you can see are actually very low. Some of them are like under 2. Some of them are under 1. Now you got to do some research when you see this, right? Because there may be a reason. There may be a very valid reason why it's so low. It could be because the project is not being maintained anymore. It could be because it's got a ton of unlocks coming in the future. But if I wanted to start looking for projects with strong fundamentals, I think the place that I would probably start would be to look for some of these things that have low market caps compared to a very high run rate. And remember, in this context, the context of DeFi Llama, and this is standard for apps that track crypto-related metrics, revenue means revenue that accrues to token holders or the project in some form. So it could be buybacks, could be going to the token treasury, could be that it's distributed directly to token holders, but it has to be captured in some form. If you find these sorts of videos helpful, let YouTube know by liking and subscribing. Thanks for watching, and until next time, this is Dynamo DeFi.